Here, all we did was we renovated the lease. That's it. We took a lease at 290,000 with 11 months left that would have traded at a 9 cap. The building was worth 3.22 million. And we changed that lease, made a simple amendment to the lease, and extended the lease for 10 years, dropped the rent by 65,000, and we just put an extra $620,000 in our pocket.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. We're back again today with our guest, Dan Lewkowicz. And man, we're going to dive back into some examples, a little more in depth about two specific examples where they added value to this triple net property and in a way that I bet you haven't seen before, or you've probably not heard of. And whether you're active or passive, you're going to learn a lot from these tips or the ways that he has helped some people add value before selling their deal. Well, I hope that you listened to yesterday's segment with Dan. Fortunately, we are having him back again today to dive into a few more topics. Yesterday, he laid out his economic outlook. And as I ask everybody on the show, what do you expect to happen, right? And I hope that you will go back and listen to Dan and learn from him and his experience. And just his group sold 320 properties last year, 40 plus states. They have a vast array of experience. It's pretty incredible. Looking forward to the conversation again today. Dan, welcome back to the show.
Thank you so much for having me. I'm excited to be here again.
Yesterday, Dan laid out, what is triple net and single net, double net? What does that mean exactly? And different things that you need to know. And I think as a passive investor or active investor, you need to understand some of the terminology that he laid out yesterday. It's going to help you to be a better informed investor. Today, I wanted him to dive into a few specific examples. I think that helps the listeners and myself often to be able to just understand it at a deeper level when we can think about a specific property or a couple properties. But Dan, let's do just that. Let's dive into a couple properties. Help us get started.
Yeah. So, traditionally people think of triple net as like a set it and forget it, pretty cookie cutter vanilla deal, which we could talk about. But I think that, and we will, but, I think that they're pretty straightforward. So, I think about, let's say a Wendy's deal that I sold here in Michigan that, has 17 years left on the lease, and it's, guaranteed by, a 65 unit operator. There's, 1.5% annual escalations in the lease. Very straightforward, right? Set it and forget it. Not much you have to do. It's absolute triple net, so you don't have to worry about any of the maintenance or the taxes or insurance. So those are, like, at least from my perspective, the simple standard triple net deals. And I think most people out there believe that that's what triple net is. But I want to talk quickly about kind of two different segments. I want to talk about both of these are value add opportunities within triple net. And I like to talk about them because not a lot of people are aware about them. One of them is going to be in the single tenant space. And if we have time, we'll talk about it in the multi-tenant or shopping center space. So single tenant space, I've got two perfect examples. So one of them is a Walgreens. This one was in a suburb of Cleveland, Ohio, and short-term Walgreens. So the Walgreens was built by this individual, by the owner. And they had run, their 20-year lease was culminating. There was about, I believe, 11 months left on the lease or 12 months left on the lease. So at that point, high risk deal because Walgreens may or may not exercise their options. So either you'll continue to get rent from Walgreens or they'll vacate, which is problematic, right? So at this point, because of that inherent risk, this Walgreens deal would have traded at approximately an 8 cap. So I'm not looking at my numbers or my notes right now, but I remember this deal having an annual rent from Walgreens of $290,000. So if we have $290,000, all right, and I said this deal was worth an 8 cap, it was worth approximately 300. I'm sorry, this deal was $290,000, and we priced it at a 9 cap. So this was about $3.22 million. So we'll call it $3,222,000. Right.
So that's what the seller. Just briefly say how you calculated that, like using your calculator, just so like the listener knows how you did that.
Yeah. So I took the annual rent, $290,000, and then I took the cap rate. So the market cap rate of a property with that short term of a lease at that time was a 9 cap. So I took the $290,000, I divided it by 0.09. Okay. So just do that again. 290,000 divided by 0.09 gets us to a value of $3,222,222.22. So we'll call it $3,222,000. Now, what I advised my client at the time, I said, don't sell this property you're selling, you have all this value here that you're not capitalizing on. I want you to do what's called a blend and extend. This is a very cool thing to do. I think this is cool because my background in real estate investing is as a house flipper, right? So I love taking something that has potential, adding something to that, creating value, and then boom, having this equity explosion. That's how I look at single family house flipping. So I look at this Walgreens the same exact way. However, from the outside, no one would ever know. So watch this. So I told them to do, they said, contact Walgreens and tell them you're willing to reduce the rent if they're willing to sign a new 10-year lease. And first of all, you'd scratch your head and you'd say, whoa, why would I reduce my rent? That's my income stream. That's my lifeline. Like, how can I reduce that? I'll show you why. So Walgreens came back and said, we are willing to do a blend and extend, but we want to reduce the rent by $65,000 to $225,000, which that hurts to hear, right? $225,000. We'll give you a new 10-year lease. Well, at the time, a 10-year Walgreens like this one with the demographics this one had traded at a 5.85 cap. So now let's do our math again. 225,000. Okay, that's our annual rent from Walgreens divided by a point. What did I say? 5.85?
I think so.
5.85. $3,846,153.84. So that is roughly an equity gain of $620,000. So unlike Dan, who was renovating the houses, right? Here, all we did was we renovated the lease. That's it. We took a lease at $290,000 with 11 months left that would have traded at a 9 cap. The building was worth $3.22 million. And we changed that lease, made a simple amendment to the lease, and extended the lease for 10 years, dropped the rent by $65,000, and we just put an extra $620,000 in our pocket. Pretty incredible, right? That's a value add strategy called the blend and extend.
I mean, that did add value to the buyer as well, right? I mean, having that the 10 years, additional.
I mean, so unfortunately for us, the seller's like, oh, this is cool. I've got a 10-year deal. I'm going to hold it. But you know what? If that's what was best for him, that's what is best for him. And that's my job. That's my job, is to be an advisor, whether or not it leads for sale. And the answer to your question is, it depends on how you look at it. From a buyer's perspective, yeah, fresh 10-year. If I was the buyer, I would have wanted to buy it somewhere in between and done the blend and extend myself.
Right.
So I'll give you another example. This is a real life example going on right now. I touched on this earlier. Burger King property, great location. It sits as an out parcel to a shopping center. An out parcel is basically a piece of real estate that's in the parking lot of a larger piece of real estate. So if you notice, whenever they build a Home Depot, they wait 5 or 10 years, and then all of a sudden pops up right in the parking lot, a Jimmy John's, a mattress firm, a Citizens Bank, something like that. So this is a freestanding single tenant Burger King that's in the parking lot right off the road of a shopping center. So this property is vacant because, unfortunately, the franchisee filed for bankruptcy, and they didn't keep the property in great condition. Seller was, out of state seller, never really been to the property, maybe just to buy it in 2007. And now they want me to market the property. So put the property up for sale, 12, 13 offers on the deal. Buyer ends up going under contract for the property and immediately works with a local leasing broker. The current purchaser is now working with Starbucks to get them to lease the property from him. He's going to have to put in a substantial amount of tenant improvement dollars, but that's okay. He's got one of the best corporations in the company on the hook for a 10-year lease at a significant rent, which case he can then relist the property with me and sell it for a significant profit. So that's another example. This would be like, taking a distressed or vacant property, re-tenanting it, and then flipping it. This is kind of what might have happened with the Walgreens in the previous example. Had Walgreens vacated, somebody else might have bought it, put a gym in there, put a dollar store in there, held it or flipped it. But that's another value add strategy. And that's going to become more and more prevalent as time goes on, because a lot of businesses are going out of business, even though they're occupying, very strong real estate. On the other side of things, which is what I alluded to before, was the multi-tenant retail or the shopping center space. I sell a lot of shopping centers. And one of the things that people do is they buy these shopping centers that either have some vacancy and then fill them up, or they have below market rents and they raise the rents on the tenants. They might expend some TI, some tenant improvement dollars, or some CapEx, capital expenditures, get in some better tenants, longer leases, up their rents, et cetera, et cetera. It's a great way to build up a lot of equity, in a relatively short amount of time. And from my perspective, I see a lot of these shopping centers they're owned by what I call respectfully, mom and pop investors who maybe have one or two shopping centers, and they've done a great job with their shopping center over the years. However, they, wanted to keep tenants happy, so they kept the rents low, which was great for them because they never had a problem collecting, never had to re-tenant. But now it presents a tremendous opportunity when they're collecting, let's say, $11 a square foot in rent, and the market is really willing to pay 17. So now a new investor will go in, raise those rents, hold or flip the building, another opportunity for a value add.
Yeah, wow, some great examples right there. And I've noticed even locally here, for example, there was a large mall that, man, you would have thought it was doomed. I mean, at one time it was doomed, but then half of it turned into a children's hospital. Yeah, I mean, it's just like, they got a really good tenant, right? Local hospital took half of it and did that. And then all of a sudden in the parking lot, there's all these restaurants popping up like you're talking about. I mean,
Nice.
a lot of them, right? That weren't there, a year and a half ago. Now there's a half a dozen restaurants in the parking lot.
There you go.
For sure. Dan, I love the examples too. The blend and extend. I think that's something, as even investors that are listening right now that have these types of properties should be thinking through, right? You helped that. And this is also a great example why you need somebody, an expert like yourself on your team, right? To help think through what's going to help us to maximize the value, right? Before we sell. We may need to wait 3 or 4 months and make a few things happen before, right, we list or before we go to market. And I just think often, as a seller, we can have kind of tunnel vision, right? And we're just focused on the selling or focused on, hey, let's go get this done. And we don't take the time to maybe think through the things like you're talking about, right? And maybe there's a way we could increase the value and that we haven't thought of, by talking to somebody that's an expert like yourself. Yeah, I love the examples, the Wendy's you talked about in Michigan, the Burger King, that's a single standing tenant. Or I wanted to ask one other question about something you actually mentioned in the last episode, not really related to that, but you mentioned you all sold 320 properties last year, and I wondered how has that compared to, say, the year before or even this year where you all are at now?
Yeah, so if I look at 2021, I mean, we sold $935 million. I think we sold close to 320 properties. I think it was a drop less. And that was like a huge year for us. And then 2022, all the doom and gloom started coming out, and people were talking about I saw an article today that one of the major national commercial real estate brokerages is at like 5% of their revenue. And articles were coming out last year, I think, that Marcus and Millichap was going to be at 13 or 17% of their revenue. And everyone was like doom and gloom. And then we had a banner year. We had our best year ever, $985 million, almost $1 billion in sales. And again, what I want to focus on is we were just named in the top 25 brokerages in the world. And if you look at that list, the majority of those brokerages have thousands of agents. We have 37. So our average agent, is doing a tremendous amount of volume, which is great. That's why I like what we're doing, because I feel like, it's the cream of the cream, and, we're able to work together at a high level. So in terms of where we're going to be for 2023, I'll be honest with you, I took the exact same mentality that I took when COVID hit. When COVID hit, I talked to a lot of brokers. I had a bunch of listings. I talked to a lot of brokers about my listings, and they said, I'm just ducking in a hole. I'm going to write off the rest of this year, and then I'll start back up in 12 months. And I said to myself, if my competition is taking their foot off the gas, I got to put both my feet on the gas. And that's what I did. And I really saw a tremendous benefit in my business and a tremendous growth in my career through doing that. And in 2023, I decided that I would take the same mentality. 21 and 22 were just like gravy years for us. 23, I decided, same thing. Head down, focus on my clients, focus on hustling, finding business, focus on selling deals. Yeah. Would I have taken that vacant Burger King a year or two ago? Probably not. Not my product type. But today or this year, I saw that as opportunity. So I don't know where we're at right now. I don't know where we'll be at the end of the year. But I believe that, thankfully, the mentality of our brokers is a heads down mentality. Again, I have to pay attention to the market. I have to watch Jerome Powell whenever he speaks, because that helps me to be educated so I can provide value to my clients. But I have to also put blinders onto all of the noise that's out there, the clickbait that's out there, and just have my heads down focusing on my deal. So I know for me, personally, I can speak for myself. This is going to be a great year. 2 years ago was my best year. Last year was, until last year was my best year after that. Will this year be quite that high? I don't think so, but I'm pleased with where I'm at personally.
Where do you gather, say, the information that you do trust? I get that question often too, because it is. I mean, it's just there's all kinds of stuff flying at you all the time, right? It's almost sickening how much is just like hitting you in the face all the time. You don't know what to believe. But folks like yourself, who like you said, you got to watch the Fed closely. You got to think about these things. Well, what do you trust? Where do you gain your insight? Your just the day to day what's happening.
Yes, I'm fortunate that every Monday we meet as a group, all of our agents together, and there's not only do we talk about all the new listings, all the closings, but there's a lot of knowledge share and mind share where individuals speak about what they think is going on in the market. So that to me is very, very valuable. I follow certain people on LinkedIn that I think have a lot of knowledge and wisdom. I like to read QSR magazine, Quick Service Restaurant magazine, because I like quick service restaurant deals. I think that CoStar puts out some great articles. You have to kind of look at them with a grain of salt because some of them can be kind of doom and gloom. But I like to, every morning when I get in, focus on all the articles that are there and, sift through and see which ones pertain to my industries and my clients, my deals, and, make sure I'm well read with that. And then, as a group, we do share articles all the time. I mean, there'll be, all agent emails that have like, hey, this is a great article on what's going on with, the way that the BLS is changing the, 1 year versus 2 year weights for CPI, for example. So I just like to, run in circles of highly educated individuals who are constantly soaking up information. And as part of that, we share with each other.
Yeah, that's some great advice right there. Running in circles with other folks who care about those things, right?
Yeah, Dan, and for me too, like is the industry leaders, right? And that's how I really, I'm very, like I said, I'm very active on LinkedIn. I have 16,000 followers, and when I first started getting active on LinkedIn, I found the top commercial real estate brokers, the people who I wanted to be like, and I started following them and seeing what they were saying. What links were they sharing? What books were they recommending? What was their opinion on things? And that really helped me because, and that's one of the things I liked about LinkedIn is that I feel like you can really tailor your content to be able to grab the wisdom and knowledge from the people that you trust.
For sure. Dan, tell the listeners how they can get in touch with you and learn more about you.
Sure. So as I mentioned, I'm very active on LinkedIn. You can follow me there, reach out, send a DM, connection request. First name is Dan, last name Lewkowicz, Lewkowicz. Again, Lewkowicz. You can Google my name. I've been on probably between 200 and 250 podcasts. So a lot of information I've shared there. And then, I'll give out my personal cell phone. So if anybody wants to reach out, if you have a deal, you want some eyes on the deal, please reach out. I'm happy to help. If you have a building that you own and you want to know what it's worth, happy to provide that service for you. And if there's anything I can do, I love meeting new people and adding as much value as possible. My cell phone number is 248-943-2838. Again, 248-943-2838. And if there's anything I can do, it would be my pleasure to connect and be in touch.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.